Need to send 50 rupees to a friend? Boom, UPI. Pay for that 120 rupee auto rickshaw ride? Boom, done. Repay that 4,000 rupees you borrowed from a friend for drinks? No judgment, just instant transfer. These tiny payment booms have become an invisible part of daily life. We don't even notice them anymore. Think about how quickly that happened. There was a time, not too long ago, when leaving home without cash could cause real difficulties. You checked whether a shop accepted cards, looked around for a nearby ATM, or simply hoped someone had change. Today, one QR code pasted on the wall of a supermarket checkout, on a street food vendor's cart, or on the dashboard of an auto solves all these problems very neatly. We all know how to use UPI. It has made many of our day-to-day lives considerably cashless. But how many of us really know what we are using? And it's worth asking if UPI, as it exists today, will stay the same or if it's set to change. The answer affects an estimated 55 crore registered UPI users. Welcome to another episode of One Big Bite, where we explore critical topics shaping India's future. I'm your host, Ananya. Today, we are looking at UPI, how it works, how it became such a routine part of life in India, how it has changed the way we use money, and the challenges that come with running and growing a payment system at this scale. So, what exactly is UPI? First, Google Pay is not UPI. PhonePe is not UPI either. They are apps through which we access the underlying system. UPI, or the Unified Payments Interface, was developed by the National Payments Corporation of India. It allows money to move directly between participating bank accounts in real time. NPCI launched the UPI pilot in April 2016. The important part is that UPI is interoperable. In simple terms, different banks and payment apps can work with each other through the same underlying system. You are not logged into one bank, one app, or one network for a payment to go through. Much of the complexity, therefore, lies in the infrastructure behind the screen. For the user, transferring money feels less like making a bank transaction and more like using any other service on their phone. This simplicity matters because digital payments before UPI often required more effort. Wallets had to be loaded, bank details entered, or merchants needed card terminals. For even a 30 or 40 rupee transaction, cash was often easier. UPI made very small digital transactions practical. UPI arrived at a particularly unusual moment in India's relationship with cash. The system was only a few months old when demonetisation was announced on 8th November 2016, creating an immediate shortage of usable cash and pushing both consumers and businesses to look at other ways to pay. It is important not to confuse the two. Demonetisation did not create UPI. UPI already existed. Nor did India suddenly become cashless. Cash returned after demonetisation, and it remains an important part of the economy even today. What demonetisation did provide was an early period of first experimentation with digital payments. The government began actively promoting digital transactions and introduced incentive programs for consumers and merchants. On December 30, 2016, it launched BHIM, a UPI-based payment app. Government figures published a few months later showed a sharp increase in UPI usage during that period. Millions of people asked themselves a practical question. If cash is harder to access, can the phone do some of the work instead? For digital payments to last, though, people had to keep using them after cash was readily available again. That took longer. But the QR code helped here. A large retailer could already afford card terminals and payment infrastructure, but a small merchant needed something much simpler. Printing a QR code and displaying it at the counter made accepting a digital payment relatively easy. It also meant digital payment could make sense for amounts that previously seemed too small to bother with. Then, in 2020, COVID gave digital payments another push, but for a very different reason. During the early months of the pandemic, movement was restricted and large parts of the economy were shut. When businesses reopened and people began buying things again, reducing physical contact became part of everyday behavior. Ordering groceries remotely, paying a delivery worker, or buying something without exchanging notes all made digital payments more useful. The RBI was simultaneously expanding the infrastructure around digital payments, including measures intended to make payment systems more widely available and secure. By the end of 2020, it was also moving settlement systems towards round-the-clock operation and increasing limits for contactless and recurring digital payments. Demonetisation had encouraged people to try digital payments when cash became scarce. COVID gave them another reason to use digital payments when physical exchange became inconvenient. Both these events provided incentive for the behavior to continue when the immediate reason for adopting it had passed. Today, paying 20 rupees digitally does not feel unusual. And that says a lot about how integral UPI has become. By July 2026, UPI was processing 2,366 crore transactions worth in a single month. The speed, convenience, and digital form of these transactions has altered how we use money. UPI supports merchant payments, recurring payments, and transactions linked to other financial services. Businesses can collect payments throughout the day without handling the equivalent amount in cash, and households can move money between accounts without going to a bank branch. There is also a behavioral side to making payments so easy. Think about this. Handing over a 500 rupees note versus entering a PIN for rupees 500. The amount is identical, but the experience is completely different. One feature has been particularly important to UPI's spread. For ordinary users, it largely feels free. Since January 2020, UPI merchant transactions have operated under a zero MDR policy. MDR, or merchant discount rate, is the fee paid by a merchant for processing a digital transaction. For a small business deciding whether to accept cash or digital payments, not having a processing charge makes the calculation fairly simple. But processing the transaction itself still costs money. Banks maintain payment systems, payment companies run their apps, and NPCI operates the network. The system also needs investment in fraud prevention, cybersecurity, and capacity as transaction volumes continue rising. That question has briefly returned to the news. The government has amended the legal framework so that a nominal MDR could eventually be introduced for a limited category of merchant transactions above a threshold. It has also been explicit that consumers will not pay transaction charges, person-to-person transfers will remain free, and the vast majority of merchant transactions are expected to remain free as well. No final MDR structure has been decided yet. So, this is not really a story about suddenly paying extra every time you scan a QR code. It is a question about how a payment network that was built around very low costs will be funded in its next stage of development. UPI spent its early years trying to expand adoption. Now more than 24,000 crore transactions are being processed annually. The Ministry of Finance itself says the system will require continued spending on cybersecurity, fraud prevention, and infrastructure, while relying only on subsidies is unlikely to provide a permanent model. The balance is delicate. Higher costs could make a digital payment system less attractive to some merchants, particularly the smaller businesses. But maintaining a system of this size also means somebody has to pay for the infrastructure behind it. India is also taking parts of this payments model abroad. The Finance Ministry says UPI is now live in 11 countries, although what UPI abroad means varies. In some places, UPI allows Indian travelers to make merchant payments, while other partnerships involve linking payment systems or building similar real-time payment infrastructure. These payment systems have also become part of the wider trade conversations. The United States has raised concerns about India's support for domestic payment systems and its impact on foreign payment companies. At the same time, Google Pay, an American-owned service, is one of the major apps through which Indians access UPI. The debate, therefore, is not as simple as foreign versus domestic technology. It is also about who should operate the underlying infrastructure for such a vast financial system and who can compete on top of it. For countries considering their own instant payment systems, India's experience offers both an example and a set of questions. How open should a system be? How should it be funded? How much of the underlying payment infrastructure should remain domestic? Most of us are unlikely to think about any of this the next time we scan a QR code. We will check the amount, enter the PIN, and wait for the payment confirmation. UPI has reduced many of the small frictions that once came with moving money and, in doing so, altered what consumers and businesses expect from a payment system. The work ahead involves keeping the system reliable as volumes grow, reducing fraud without making payments cumbersome, and finding a way to fund the infrastructure without making ordinary transactions unattractive. UPI spent its first decade making digital payments easier to adopt. Its next decade will depend on whether that ease can be maintained as the system becomes an even larger part of India's financial life. This was another episode of One Big Bite. I'm Ananya, and I'll see you in the next one.